This is a download from BFM 89.9, the business station.
Islamic finance. Year upon year, it is an industry that is growing at a breakneck pace. For an enterprise so young, barely out of its 50th year, it is expected to record a compound annual growth rate of 15 to 20% until 2015, outpacing the traditional banking system by 50%. Global Islamic investments are set to grow to $2.1 trillion by 2014. It is an industry on the verge. There is money to be made and everyone is now jumping on the bandwagon. The UK is set to become the first country outside the Muslim world to sell a Sharia-compliant bond, and the London Stock Exchange will create its very own Islamic index. You're listening to Here and Now in Malaysia, brought to you by the Economic Transformation Program. I'm Umapagan Ampikaipakan, and this week I will be taking a look at Islamic finance here in Malaysia. I spoke to 4 individuals: an analyst, a consultant, a practitioner, and an academic. I know, it sounds like the beginning of a very bad joke. I spoke to these 4 individuals in order to ascertain Malaysia's continued relevance in this booming industry. I asked all of them 3 questions. What is the reason for Malaysia's astounding success in the industry? What are some of the issues, concerns, and challenges that still need to be addressed? And can Malaysia hold on to its market dominance in the face of tremendous competition in the industry? But first, a little reminder of just what Islamic finance is.
Islamic banking system is banking system based on justice and equity. That is the idea promoted by what we call it classical professor in Islamic banking and finance.
That was Datuk Professor Dr. Sudin Harun, the academic. He is the president of Kuala Lumpur Business School as well as the advisor to Bestari University College in Terengganu, the first Wakaf-based university in Malaysia. Basically, the principles behind Islamic banking are the sharing of profit and loss and, significantly, the prohibition of the collection and payment of interest. Islamic finance is based on sharing risk, and it is more asset-based. It is therefore considered to be fairer and more equitable. Do you know what is the best part of this Islamic finance boom? Well, for us anyway, it's that we here in Malaysia are the market leaders. UK Prime Minister David Cameron recently said in a speech at London's World Islamic Economic Conference,
"Because I don't just want London to be a great capital of Islamic finance in the Western world, I want London to stand alongside Dubai and Kuala Lumpur as one of the great capitals of Islamic finance anywhere in the world."
we are the standard bearers, the ones to beat. And with good reason. We did, after all, have that early mover advantage.
If you look at any niche movement, it has to take an enabling approach to it, a top-down, bottom-up. The fact that Malaysia started its journey in 1983 and with successive prime ministers, successive central bankers, and other stakeholders promoting, expanding cautiously but aggressively has allowed Malaysia to be a locomotive for Islamic finance in the OIC specifically and in the world generally. So yes, being the first player in the space with an approach of understanding the space of where it wants to be every 10 years is one of the attributes that I'm particularly proud about concerning Malaysia.
That was the analyst.
Well, good morning or good afternoon. The name is Rushdie Siddiqui. I've been with Dow Jones Indexes, Thomson Reuters, and I've made the transition into private equity in the agro-food areas.
Now here's Baiza Bain, Managing Director of Amani Advisors. He is the consultant. Here he is with a quick history lesson.
We started with Bank Islam in 1983. In fact, it was first full-fledged Islamic bank in the world. And then, way back when, in 1960s, we already started with Tabung Haji.
What we did was work slowly and work smartly. First, we made Islamic finance a success domestically.
You have the Islamic banking, where the assets as at first half of 2013 stands at about 527 billion ringgit, which makes up 24.1% of the banking system's total assets, which is very impressive because I remember we started off with just one Islamic bank, and then we went to a window, and then now it's almost 1/3 of the banking assets here in Malaysia. And then if you look at the takaful market, that has grown significantly as well. This year's contribution, I think, is up to about 6 billion ringgit, up from 3 billion in 2008, which is double the size.
And then there is our crowning glory, the sukuk industry. Now, a sukuk is an Islamic financial certificate, similar to a bond in Western finance, only one that complies with Sharia law. And it is a market we gave birth to. The market capitalization of corporate sukuk in Malaysia stood at 303.9 billion ringgit in June of 2013. Today, Malaysian sukuk in ringgit account for about 2/3 of the global sukuk volume.
The first sukuk was issued out of Malaysia in 1990, I believe. We have now account for 60.4% of the global outstanding sukuks in the world. In fact, out of this year's sukuk issuance, in total, Malaysia again covers about 60%. And this is not just for domestic issuers, because the Malaysian sukuk market also caters for foreign issuers.
What's more, as of June this year, 63% of securities listed on Bursa Malaysia are Sharia compliant. We built one of the largest national Islamic fund management industries in the world, with 82.23 billion ringgit in assets under management. We put all of those instruments in place and then made ourselves an international center for Islamic finance, inviting foreign banks to set up base, as well as granting seed capital to foreign fund managers to build Islamic enterprises in Kuala Lumpur.
The thinking with regards to the powers that be in Malaysia is that we have to reinvent our game every few years, otherwise we get left behind. So we moved on from having the first Islamic bank to the central bank introduced a window in which conventional banks can sell Islamic products to the Islamic window. So that makes sense because that sort of like gradually introduces Islamic products to the masses, and the masses sort of like got comfortable with it, and they brought the game a notch higher in 2005 when they allowed the entry of GCC banks into Malaysia. So you have people like Kuwait Finance House that operates here. You have Al Rajhi Bank from Saudi Arabia, and you have Asian Finance Bank. What they wanted was to introduce competition, because now they have very serious competitors in the market, so they have to reinvent their game. They have to make sure that they come up with good products. And again, I think in 2008, Bank Negara did something out of the ordinary, in which they issued international Islamic banking licenses for foreign banks to come over here and do US dollar businesses. The trend that we're seeing is, we are upping our game every few years just so that, the industry doesn't become complacent.
And that was the secret to our success, our continued evolution, our creativity with regards to products and services, our ability to stay on our toes and willingness to change with the times. Isn't it amazing what our openness to competition can achieve?
The analogy I would use is a mountain hiker to Islamic finance. You have to make sure all your equipment and all your sneakers and your water bottles are correct before you start. And then after you get to a certain altitude, you look back and say, wow, I've gone this far, but you look ahead and say, look how much more I have to go, and I have to have more equipment. As you get higher, you may need oxygen. So it's that form of revision that we have to undertake as we move forward, because the pathway has different obstacles, speed bumps and potholes.
But that still doesn't explain why the rest of the world hasn't caught up. What about Indonesia? And more importantly, what about the Middle East? Both parts of the world with significant Muslim populations, and yet they haven't kept up with our pace. Rushdie Siddiqui has a theory.
There are many theories, so I'll put forth my theory. I think it has to do with the fact that Malaysia doesn't have oil from the ground. There's a comfort factor and there's a connection between oil, the price of oil, and Islamic finance. Right? So when there's surpluses that has to be deployed and invested and financed in infrastructure projects, so on and so forth, Malaysia doesn't have that benefit of that bounty. So it had to take the approach of taking documentation. How can we take the approach of being a hub? But let's look at the way the Western financial markets grew by regulations. So issuers, investors knew the downside risks. And that is one of the key takeaways that Malaysia should be proud of. It may not be fair to compare an apple to an orange, frankly speaking, or a durian to a passion fruit, whatever you want to call it. The Middle East, at one level, Gulf specifically, where Islamic finance has got traction, has a very fragmented approach. Sometimes it's products leading it, sometimes it's regulations leading it. We're not sure about how the scholars are educated and what their say-so is. Here, those issues are not issues. The fact that it is a very logical, structured approach makes entities, especially newcomers, feel comfortable that we know the rules of engagement, we know what the benchmarks are, and we are managing our expectations and the expectations of those who give us licenses, such as the central bank.
After this, I'll be taking a look at some of the issues, concerns, and challenges in the Islamic finance industry that still need to be addressed for it to continue thriving. From questions of branding, to varying Sharia interpretations, to newfound competition in the market. So don't go anywhere. You're listening to Here and Now in Malaysia, brought to you by the Economic Transformation Program. This is Here and Now in Malaysia, brought to you by the Economic Transformation Program. I'm Umapagan Ampikaipakan, and this week I'm taking a look at the world of Islamic finance. In part 1, I endeavored to ascertain the secrets to Malaysia's tremendous growth and success in the Islamic finance industry. Our early mover advantage, when combined with a facilitative government that provided a strong and robust regulatory framework, has led to a mature Islamic finance and banking industry that is not just world-class, but one to emulate. What then are some of the challenges still faced by the Islamic finance industry, and how can Malaysia address these in an attempt at holding on to its global advantage? Now, no conversation about the challenges faced by Islamic finance can continue without addressing the elephant in the room, the question of branding and whether it's holding it back in any way. I spoke to Dato' Hassan Kamal, the practitioner. He is the Group Managing Director of Takaful Malaysia, the country's oldest and largest Takaful company. Here's what he had to say about branding.
It's partly a branding problem, and then this is something that I think the industry will have to overcome, because I see that the non-Muslims are more open to do their business with Islamic banks. Again, provided the value proposition is better than conventional finance. So this is the key and most important thing, because people don't simply switch from conventional to Islamic purely because it's Islamic, for the Muslims. Even the Muslims now are getting very cunning and smart, in terms of how they look at the products. As long as the value proposition is there, I believe, people will make the move.
Rushdie Siddiqui has a similar take when it comes to such labels.
It was correct and right when the movement started to call it Islamic finance, the linkage between faith and finance. But as a child grows and becomes a young adult, Islamic finance is becoming a young adult, if you will. There are 56, 57 Muslim countries, but Islamic finance is not in all of them. There's the non-Muslim world. There is this distinction and separation between state and the church, if you will. So if we take the approach and say Islamic finance for the world at large as a parallel system, as an alternative system, yes. But now the branding issue has become important because to grow it, to cross-sell it, faith, religion is an emotional issue. Let's talk about what the rules of engagement for Islamic finance are. Here are the rules. And if I were to explain it to you without mentioning Islam, you said, okay, this makes sense. It's ethical, it's asset-backed, asset-based, it's linked to the real economy, so on and so forth. That's what Turkey has done. By calling it participation banking, it is the essence of what Islamic finance is about.
There's no escaping it. Branding is important if we want to see continued growth. It is worthwhile noting that the Islamic finance industry is starting from a relatively low base, its assets accounting for less than 1% of global banking assets today. It is still a niche market, albeit one that has benefited greatly from the global financial crisis and the resulting disillusionment with conventional banking. Dato' Hassan Kamal believes that we need to exploit the niche. This is him explaining that thought.
People have mentioned in the past that Islamic finance is more transparent and so forth, but then in terms of the economic benefit to the user, by using Islamic finance instruments compared to conventional finance instruments. I think this has to be made more known to the public and to the population if we want to see Islamic finance to be growing beyond the niche market, to be a controlling force in the finance environment in the world.
It is something Rushdie Siddiqui believes as well.
The reality of the situation is you have a movement that's $1.3 trillion, and you've got an existing financial system that's centuries old that's 100 times bigger. So what is it that this niche market is going to convey in a convincing way to this huge market? It has certain suggestions on why it makes sense to prohibit speculation, why uncertainties needs to be removed from products and transactions, because those are some of the preconditions to make the contract, the structure, and the transaction permissible in Islamic finance. So there are bits and bobs that we in Islamic finance can share and let the Western markets absorb that, think about that, and then output.
The problem we have today is the Malaysian population is only about 30 million people. We have to grow beyond our boundaries and our country to grow the business and to show the world that Islamic finance is a very powerful, very viable financial instrument, for the world.
And then there are issues of interpretation. When dealing with a financial system that has its roots in religious tenets, theological disagreements as to what is acceptable and what isn't are bound to come up. These scholarly disputes have been going on from time immemorial. Here's Dato' Hassan Kamal again.
Sharia interpretation on Islamic finance matters have always varied depending on the scholars you speak to. Even the Quran interpretation has also varied depending on the hadith, and the type of scholars that you speak to. And this is quite widely acceptable. Scholars have done thousands of years of research, in understanding the authenticity of certain interpretations. Variation in interpretations are healthy because this will stimulate a lot of thinking and variations in our product and innovation.
The academic, Dato' Professor Dr. Sudin Harun, believes that this interpretation gap is narrowing.
Well, it is narrower. If you still remember, I was one of the person who promote the establishment of International Center of Islamic Finance in Malaysia. One of the reasons of the establishment of this center, that we want to harmonize the differences between Muslim scholars in Malaysia as well in the other countries. If there is a difference in interpretation, now we have many venues to discuss and to elaborate, to get the consensus among the scholars, among the Sharia scholars, that's how to solve this problem.
The efforts at which seem to be reflected in industry as well. Here's Baiza Bain, Managing Director of Amani Advisors.
As far as Islamic finance is concerned, you have two very big pockets. You have Malaysia, and then you have the GCC.
The GCC, or Gulf Cooperation Council, a political and economic union of Arab states bordering the Persian Gulf, namely Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the United Arab Emirates.
We do differ from the GCC in terms of interpretation of certain things. For example, in terms of whether debt can be traded. So in Malaysia, our interpretation is yes, you can trade debt, but in the GCC, you can't. There have been many efforts by AUFI, the standard setting body in Bahrain, to sort of like bring the two parties together. And I think it's evident nowadays that even in Malaysia, there's a lot of acceptance with regards to how things are done in GCC. And in the GCC, there's a lot of respect in terms of how things are done in Malaysia.
And therein lies the solution to questions of interpretation, standardization, because that's what builds confidence in the industry. Here's Rushdie Siddiqui.
At the end of the day, the one important takeaway from the Western markets is conventional efficiency. As Islamic finance grows, that conventional efficiency rises to the level of the Western markets. Then you have financial intermediation, you have more players, and players bring in liquidity. Liquidity grows the market.
Moving forward, what then does Malaysia need to do? To answer this, we need to look at three different aspects, namely innovation, talent, and competition.
If you look at disruptive innovation, Islamic finance is disruptive innovation compared to conventional finance at one level, and Malaysia is the leader because it understands the rules of engagement with respect to this niche market. We need to have risk or entrepreneurial capital involved in this space, and I think Malaysia is probably one of the few jurisdictions that can do this. Understand, to get financial inclusion, especially of the youth, they have ideas. Ideas cannot be collateralized. You need equity capital. If Malaysia embarks on that, and I think the powers to be are looking into that, which is a good thing, I think then there'll be this balance.
So where are we with regards to innovation? Dato' Hassan Kamal.
Even though we know in China the Islamic population is quite large, but we're not able to introduce any products in China purely because there are no Islamic instruments for us to invest. So before Islamic finance can grow into this part of the world where there are Muslim population but there are no Islamic instruments, the first thing we need to do is create the expertise and the resources for them to start Islamic banking.
Which brings us nicely to talent. So where does Malaysia stand with regards to talent? Here's Baiza Bain.
On the local scene, I think Bank Negara Malaysia has played a very crucial role. They recognize the need to grow talents. So they set up the INCF, International Center for Education in Islamic Finance. I'm proud to say that a lot of people that I've encountered in the GCC, they know Malaysia because their kids have gone to INCF. And they say, oh, Malaysia provides very good education in Islamic finance as well, and it bodes well for our reputation.
And finally, just how worried should Malaysia be with regards to competition? From London, from Dubai, from Singapore, from all of these other players now entering the field. Here's Baiza Bain.
The threat is obvious because you have major financial centers in the world eyeing a piece of the pie. What Malaysia has is the first mover advantage. Obviously, it won't last forever. Therefore, we can't be complacent. We should be continuing to rebrand ourselves, to up the game every few years. But I think the key thing for Malaysia to still thrive at the top will be talent.
Now, Dato' Professor Dr. Sudin Harun.
In the first place, you like Islamic Bank to be used by other countries. But at the same time, you want to become a market leader. But of course, Malaysia, we are very small. If we like to promote Islamic banking system to other countries, we should not be seen as a selfish country. For me, it is good if other countries also become a center that promote Islamic banking product. So this can create a healthy competition. But you should be happy you are the pioneer of certain things.
And finally, Rushdie Siddiqui.
The West is coming into the game basically to take some of that liquidity and invest it and take their management fees. Let's just be honest with ourselves. The fact that you have Western blue chip institutions involved raises the profile of this niche market much higher. But let's also understand they're not doing missionary work.
Chris Wright of the Financial Times wrote, "No country worldwide has made a more concerted effort to make itself a center for Islamic finance, with a rare alignment of government, central bank, securities regulator, and institutional investor base working together to make it happen."
I think it's important that Malaysia continue to focus and divert its energy and resources towards growing Islamic finance. Because if we divert from this path and focus more on conventional finance, then we'll be competing with the rest of the world. This is one area where the world cannot compete with us. So I believe we should just focus our effort and energy towards what we do and what we know best. And this is Islamic finance.
You've been listening to Here and Now in Malaysia, brought to you by the Economic Transformation Program.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9,